What's up, traders? What's up, tycoons? Super excited for today's video. We got to talk about Rivian. Rivian is about to report earnings very soon, and we're going to dive into the chart and also some of the fundamentals in today's video. So be sure to smash that like button, subscribe to the channel for more. Today's video is sponsored by Simply Wall Street. All right, it's a really amazing platform, and we're actually going to use them in today's video to dive into Rivian a little bit more than just the surface and just the chart. So be sure to smash the like button, subscribe, and we'll get right into it. Now, you can see here on the Simply Wall Street platform, okay, that revenue is forecast to grow 38.67% per year. All right, we're going to dive deeper into the company overview for Rivian. But before we do so, I want to go into the chart. Now, this red box right here, this is the expected move. Okay, so this is what the options market is pricing in around earnings and where the stock could go. So to the upside, that's going to take us to about 28.85. And to the downside, it's going to take us to about 21.64. So that's what the options market is pricing in for the expected move and the implied volatility. Now, when we take a look at the recent earnings that we've had, okay, you can see here that it gapped down and actually closed lower, right? It sold off pretty significantly here on its 2 earnings ago, right? And then its most recent earnings, you can see that the stock gapped up higher, but it sold off immediately afterwards, right? So the candles tend to be red on Rivian's earnings. It's just a matter of, is it gapping to the upside or is it gapping to the downside, right? So I do expect this stock to either gap up or gap down pretty significantly based off of earnings. And this red box right here is what the options market is implying. Now, if you take a look, we have this trend line here that we're holding, and we're really, it's basically the last chance right here. Okay, if we break through this trend line, then there's a strong chance we're going to come down and fill this gap right here. That's what this box is right here, and this box, these are gaps down on the chart. There's 2 daily gaps down to fill. Now, they don't have to fill soon, right? There's about a 90% chance that all gaps tend to fill in the market, but they don't have to fill very soon. Okay, if we actually zoom out and just take a look in the past, Rivian has a huge gap up to fill, up at $60, and this is all the way from February of 2022. So again, 90% of the time, these gaps do fill in the market, but the big question is, when are these gaps going to fill? Okay, so just wanted to provide a little bit of perspective. All right, now again, if we break this trend line here, we do have a little last line in the sand of 24.58. If we break through that trend, that support line, and also this trend line, then I think that it's highly probable we're going to come down and fill this gap down at 21.79. That also falls within the expected move for this upcoming week. So, you definitely want to keep that in mind. Now, there's a good support level here at 22.42, 20.68, and 18.94. If we break below 18.94, then we do have another gap down to fill at 16.86. Another thing that I want to bring to you guys' attention is something known as bearish divergence. Now, a lot of people use the RSI wrong. Okay, and you can see here how we're at these extremely overbought levels, right? You see we're above the red line, that's 70 on the RSI, and it's extremely overbought. And a lot of people on YouTube would tell you that this stock is due to immediately crash because it's so overbought. But you can see that the stock actually continues to rise higher and go up in price. Just because something is overbought does not mean it can't continue going higher. It's just telling you that there is a lot of strength, right? There's a lot of strength and a lot of momentum behind the stock at the current moment. Now, the RSI is what's known as a leading indicator. So you can use it to see what's potentially going to happen in the future. And if you take a look here, right, we have the high, and then we have these series of higher highs. And then we have a high here, and we have a series of lower highs on the RSI. This is a bearish divergence, right? And you can see that most recently we had an extremely large red candlestick here on our daily time frame. Okay, and this is partly due to that bearish divergence. Now, it's telling us that we could see some bearish activity in the future because of this bearish divergence, and because the RSI is a leading indicator versus your MACD, which is going to be a lagging indicator. So It doesn't mean that this has to play out. Oftentimes I really love looking for trading opportunities whenever we break a divergence trend line, whether it's a bullish divergence or a bearish divergence. If we break through this trend line and can flip it to support from resistance, then there's a good chance that the stock has a lot of momentum to rally. Now, there's some work to be done before we even come up, and you need to be mindful of us coming up, getting rejected by that trend line again and heading lower, right? That's going to, try and put downwards pressure on the stock and potentially push it to these lower levels. Okay. Now to the upside, we have 27.98 is a very strong resistance level. You can see, prior support. Okay, here and here turns to new resistance, and we came up and retested that key level of 27.98. If we can break above 27.98, our bullish price target is 28.69, which also falls within the weekly expected move. So you can see that, we have the gap fill down here, which falls with in between the expected move. And we have the bullish price target up here that falls within the expected move. If we were to go outside of these ranges, I've already given you the downwards price targets. To the upside, I'd be looking at 32.06 for Rivian. Okay, so that's pretty much our technical analysis. Now let's head back to Simply Wall Street. And don't forget, there's a link in the description with a 14-day free trial and also up to 40% off for the first 100 people that join. And this is a brief walkthrough of the platform, right? So you can stay up to date with all of the recent news and updates through the platform right here. It gives you direct links to all of those. You can take a look at the shareholder returns versus the market and the sector. You can see its price volatility. Rivian is more volatile than, your average market volatility, but it is below the US auto industry average volatility. So, just some quick overviews basically about the volatility. You can see its price to sales ratio at 10.7x, right? And its PE ratio here at negative 3.6 gives you a quick breakdown of its earnings, revenue, market cap. And you can see this a little bit more in some of these nice graph charts that they have for you guys. A really cool feature that's still in the beta that's going through right now is being able to take a look at the revenue and expenses breakdown. I really like this a lot for diving into companies and just getting a quick overview of where are they spending their money, how much of it is actually profit, etc., so on. Now, from a valuation standpoint, it doesn't look the best at a valuation standpoint, okay? And the reason being is because the price to sales ratio versus its peers is above the peer average. It is below Lucid, but it's above the peer average here. And you take a look at the price to sales ratio versus the industry. And again, the industry average is going to be at 6.0 price to sales ratio, and Rivian's at a 10.7. All right. Now, the thing is with high growth companies, right? And that's what Rivian would be, right? If you're investing in Rivian, you're not investing because of the profits that it's generating right now. You're investing in it because of the profits that you believe it's going to have in the future. So oftentimes, you can see that you could potentially be paying higher valuation prices for that future growth. And that's not uncommon to see. But these are some really good metrics to really help you out. Now, the average analyst forecast has the stock going up by about 3.3% within the next year. So not a huge boost, but we're not seeing a big significant downgrade basically from the analyst price targets. You can see the future growth right here. It gets a 2 out of 6. This is a nice little earnings and revenue growth forecast breakdown. So, you can see here that earnings and revenues in blue here, earnings is in this greenish color. You can see that they both are expected to continue rising heading into 2024 and 2025. And you see the analyst future growth forecast for the company is about 21.2%, and their annual revenue growth is going to be at about 38.7%. Now, when you look at the industry average and the market average, okay, the annual revenue growth forecast is higher, but when you look at the earnings growth, the industry standard is higher, but the company is higher than the market standard. Okay, now this is their EPS growth forecast, and you can see that earnings per share are expected to grow as well throughout 2025 and heading into 2025. All right, and this is just a quick overview of some of the different features that's on, Simply Wall Street. I've used the platform for a while, and I'm definitely glad to have them as a sponsor. So I want you guys to go ahead and use that link in the description to download it. Remember, you're going to get that 14-day free trial, and you can look up Rivian. not just Rivian, but look up some of your favorite stocks that you own or some of your favorite stocks that you really want to own and use Simply Wall Street. They have their pros doing the fundamental analysis for you guys if you're not a pro at fundamental analysis, and making things very simple for you guys with some nice line graphs. We have some nice bar charts and pie charts, different things like that. To make it as simple as possible and really help give you an edge in the market. Remember, if you choose to sign up using the link in the description, the first 100 people will get up to 40% off. If you enjoyed today's video, smash that like button, subscribe to the channel for more. I just started a brand new free newsletter. Those emails are going out starting this week, and I'm going to be, giving you guys some really good content on there. Also going to be giving you guys some free trade setups on stocks that I'm watching throughout the week. So if you enjoy free trade setups and you enjoy, free valuable content, I definitely recommend signing up for that newsletter in the description or in the pinned comment down below.